Hello and welcome to Investor's Edge. Now that we've gotten the terminology out of the way, let's piece everything together. Why would you buy a call option in the first place? Remember, call options give us the right to buy a stock in the future at a predetermined strike price. If we are going to do this, then we must have a positive or bullish outlook for the company. The risk associated with our trade is confined to the premium we pay to enter the contract. If the contract expires worthless, then the amount we lose is simply the amount we put in. Looking back at an earlier example, we now illustrate the call option payoff for buying 10 contracts of the XYZ $12 call option for 95 cents per contract. The option is not in the money until the underlying stock hits $12. The break even on the trade can be found by adding the option strike of $12 to the 95-cent premium that we paid. Therefore, the stock price must be above $12.95 at expiry for us to make a profit. Let's say the stock closes at $16.50 on expiry. Our profit is calculated by subtracting our break-even price of $12.95 from the current stock price of $16.50 and multiplying it by our share exposure of $1,000. This gives us a profit of $3,550 on an investment of only $950. If by comparison we purchase 1,000 shares of XYZ at $11, the same stock price of $16.50 would generate a return of $5,500 or 50% over that same period of time. So now that we've talked about calls, let's illustrate a put option, which you would purchase if you have a bearish view on a particular company or you would like to buy insurance on some of your existing portfolio holdings. Here we have XYZ trading at $18. We buy 10 contracts of the $15 put for $2 per contract. If the stock closes at $8 on expiry, it would be $7 in the money, so our profit would be $5 per contract, or $5,000. Now, what would happen if the stock closed at $16.50 on expiry? The $15 put would be out of the money and therefore worthless. You would lose the $2,000 premium you initially paid. There you have it. You now have a basic understanding of what options are and how they work. Thank you for watching.